James Bevan, we're seeing this. We're seeing an extrapolation forward of these successful blue chip platforms. Is that a dangerous game or is it common sense?
It's massively dangerous, Tom. I absolutely concur with the perspective. These businesses can make shareholders a lot of money over the long term. What I'm questioning is whether the share prices are simply running too far ahead. And the wall of money that has come from both the Federal Reserve and more recently the US government is clearly propelling stock prices to levels that I begin to anticipate becoming very detached from reality.
Everybody worldwide, I want you to understand that James Bevan has the best remote audio of anyone we've talked to since the beginning of the pandemic. Whatever you're doing, James, at your studio there, it is mint. James Bevan, when we look at the equity markets, are they delinked from what we see in gold and the dollar dynamics?
No, I would say that these are all connected movements. If we unwrap what has happened to the gold price, it's heavily correlated with the movement of the US Treasury inflation-protected securities. As you identified slightly earlier in the program, we're now looking at record low negative real yields from US tips. Now, that seems almost oxymoronic, but there we are. They have been driven there by extraordinary buying by the Federal Reserve to put a floor under markets, and gold has been a beneficiary. I equally anticipate that there are some quite interesting technical factors behind the recent strength of the gold price. And normally, as you will all be aware, gold is traded in the futures market. People trade out the futures and take cash delivery. Now I would observe that there are a surprisingly large number of people taking physical gold delivery at the end of the futures contract. And there are far more futures contracts in circulation than the availability of physical gold. So people who have to deliver on the futures contract have to go into the market and buy physical gold. I think that there is therefore a short position in physical gold valued at perhaps $40 billion, and that's going to keep the gold price going for some time.
James, would you be buying at these levels?
Absolutely. I don't buy gold. I don't buy cryptocurrencies because I want there to be a fundamental underpinning in the form of free cash flow. I like to be able to value something based on calculating the future value of the cash flows that I will receive as an investor. Very much if I was owning a private company. Now, with a little block of gold sitting on my desk, how do you put a price on it for the long term? And I would say that the gold price will come down as and when real confidence in the global economy returns and as and when, therefore, bond yields begin to rise once again.